Welcome to Stuck Time to Improv. I'm Mary Scott with Business Riff, and I'm so happy to be here again. It's Tuesday. We're doing Facebook Live, and we're helping give startup businesses really good advice and lots of resources to be wildly successful. And it's all about the money, right? After it's about your passion, it's about the money. So today, we're so lucky to have with us Kelly Alexander, who is the founder of the Great American Tax Remedy. And she's going to talk about tax advice for startup businesses. So tell us a little bit about yourself, Kelly.
All right. Well, thank you so much. Yes, it's all about passion first and then the money second. And my passion has been doing research, which I've done over at least the course of the last decade. And I've uncovered some really extraordinarily well hidden, rare, and powerful information regarding our tax system and how it relates to our monetary system and, in fact, our whole economy. So whether you're a startup or you're a couple of years, few years into your business, this will apply to you. I've been doing this process myself since 2014. I have not paid income taxes since then. And
Wow.
I've done it legally, safely, ethically, and I have secrets to share. So here we go.
Is there something particular for startups that they should pay attention to when it comes to doing things right the first time so they don't have to fix it later?
Uh, in general, yes. I'll speak to that for a few moments and then we'll go into my other discoveries. I found that a lot of startups feel this compulsion at the prompting of outside influences to hurry up and set up an LLC. If you're going to be doing business to business, that's fine. If not, typically setting up an LLC right out the gate is premature. You end up paying lots of business fees year after year. You know, an LLC can be useful for mitigating some of your tax liability. It's also useful for asset protection. But until you have, some good revenue and assets to protect, I would say, just don't, that doesn't need to be at the top of your list. And then with an LLC, it's very important not to commingle your personal with your business expenses and accounts. Keep everything separated. The LLC, think of it as a separate person.
Yeah, one of the things I always tell people is that your business accounts and your personal accounts should be in two entirely different banks, two entirely different institutions, because you don't want to have any question that this is business and this is personal.
Yeah, that's good. That's good. Because that will invalidate the protections that come with the LLC if that distinction isn't kept clear.
Okay. So tell us a little bit about some of your discoveries.
So I found something in the banking law in the United States Code, which is federal law. Title 12 is dedicated to banking laws, and it talks about the Federal Reserve notes. That's the money that we're carrying around in our wallet, we're all familiar with. And there's a way to redeem those Federal Reserve notes for another kind of lawful money. And this other kind of lawful money is authorized by our US Constitution to be issued directly from the Congress without the involvement of a central bank like our Federal Reserve.
Wow.
Who knew? So there's actually two distinct currencies available for us to use. So I want to talk about the differences between each currency. The Federal Reserve Act came into being back in 1913, and It places an obligation on the US government for every Federal Reserve note that gets issued into existence is $1 of debt that must be paid back by the government, both in principal with added interest. This obligation is the basis and the reason for our income tax system. Before the Federal Reserve was passed, there was no IRS. That was since 1913 that happened. The IRS is actually the debt collection side of the Federal Reserve. So people that use Federal Reserve notes pay the income tax. Okay, so that's an overview of the Federal Reserve notes. The other lawful money is known as United States notes. That money does not incur an obligation to be paid back. It is a reflection of the goods and services that the people of the country generate through businesses, their labor, their creativity, their inventions, all of those things. And because there's no obligation that comes with the United States notes, other lawful money, currency, it is not subject to income tax.
So when you're paying for stuff with plastic, how do you get it to pay in US notes rather than Federal Reserve notes?
Okay, it's a great question. The paying for things is not the key point of the transaction. The key point is when new income enters your bank account. So let's say you have a business and your clients pay you with credit card payments. You have a merchant account. The merchant account will collect those funds and then you authorize them to deposit those funds into your bank account. There is a one-page sheet of paper that adds a little bit of legal terminology to that authorization that converts that money to the United States notes. It's very simple.
Is that something you have to get your bank to agree to, or how does
Nope.
that work?
Nope. Um, with this ability to select which currency we want to use, you can notify your bank or you can notify the United States Department of the Treasury. And for electronic movements of money, I found it's just simpler to notify the Treasury because they're linked into all the system. So that's what you do for that source of income. If you happen to be a new business and you're still phasing out, say, a W-2 job, while you build it up, most people receive their paychecks through direct deposit in this day and age, as opposed to a physical paycheck. That's something that you filled out with your employer, a direct deposit authorization, giving your employer the ability to deposit your pay into your bank account directly. So I work with people on, again, creating a new one piece of paper, amending that authorization slightly to show that it will be the lawful money described in the Title 12 banking law.
Okay. And I'm surprised that nobody has found this loophole, if you will, and taken serious advantage of it, or, in Congress, put in something to include US currency in what's taxable.
Well, okay, very few people have discovered this, and they, some of them are taking advantage of it. But the status quo, powers that be, they really don't want to share this. So they just don't talk about it. That's all. It's just something that's silent. I mean, we don't hear about it in the media. We don't hear about it in the financial services industry. We don't hear it from the legal sector. It's not taught in universities. So it's just, it's like out of sight, out of mind, out of ear, out of knowledge. I mean, we just don't hear about it.
So this is a way to get income and avoid paying any taxes on it altogether.
It is, and it's a way to help our government lower the impact of our national debt, because when people exchange their Federal Reserve money for United States notes, the obligation on that money falls off of the national debt.
Oh,
So it's a win for us as individuals, and it's a win for the government also. It's actually a very patriotic thing to do.
wow. That's
It's
pretty
pretty mind blowing.
amazing. Yeah, it's pretty mind blowing.
Yes, I can imagine that little voice in your mind going, this sounds too good to be true. This sounds crazy. This sounds impossible. um, but it is
Like I
there.
said, it's hard to believe that since 1913 nobody has come in and plugged this loophole, or
Reason,
has actually used it a lot more.
there's a reason why it hasn't been plugged.
Mm-hmm.
Um, when the Federal Reserve Act was first passed, we were on the gold standard. And the
Ah,
Federal Reserve note in the beginning could be fluidly exchanged for gold or paper back and forth. In 1933, 20 years later, the country was going through the Great Depression. We went off the gold standard because of the horrible economic position of the country. FDR, who was president at the time, Franklin Delano Roosevelt, put out an executive order requiring the citizens to turn in their gold coins, gold bullion, and gold certificates to receive Federal Reserve money that would no longer be backed by gold. They realized that that was an unequitable exchange of value, going from gold to only getting fiat non-backed currency.
mm,
So the Congress passed House Joint Resolution 192 that put this law on the books, the one that I talked about, Title 12, subsection 411 in 1933, allowing for this redemption. And there was other features to the resolution, because if they didn't provide an authentic remedy where the citizens could regain their equitable value, the Congress would be liable for theft and treason.
wow.
So they cannot close it because it's not a loophole in the sense of a lobbyist just creating some fancy,
Mm-hmm.
avenue in the tax code. It's there. And I think that's why they don't talk about it. They just assume everybody remain ignorant.
Right.
And,
So how is the concept of Bitcoin play into this? That's like the next thing that people are going to, we were dealing with gold and silver, then we're dealing with paper, and now we're dealing with digital blockchain currency. Um, how does the tax code work with that?
all right. So Bitcoin is not tied into the central banking system at all. It's entirely separate from that. It is decentralized, which means that the transactions themselves cannot be manipulated. Bitcoin becomes taxable as with any other cryptocurrency when you sell it and then convert it to US dollars. The standing presumption is that unless you declare and document otherwise, you're always dealing in Federal Reserve notes. So I show people how to break that presumption, and they can apply this demand for lawful money the same as they do with their merchant account or their paycheck or their job or all the other sources of income, and then it would no longer be subject to income tax.
Wow. So, and I'm
Yes.
assuming some of your clients have been audited and they've succeeded in getting through it.
What happens is people that do this remedy, they do not get audited. Audits happen for people that take an excessive amount of deductions. That's how the IRS flags for audits.
Mm-hmm.
What can happen with people that do this remedy is they can receive something called a frivolous filing notice from IRS.
Mm-hmm.
And it's a form letter. It says, you know, on the face of it, your return looks or appears to be frivolous. So far, none of my clients have received one. However, I have. I got to a point when I actually started praying, please send me one so I can, you know, go through that side of the process, because it's very important. And I want to be, you know, I'm the trailblazer. I want to do
Right.
that. So 2 years ago, they sent me frivolous notice for year 2018, and then a couple of months later for year 2017. I sent them paperwork. They remained quiet for a year and a half. No penalty, no lien, no levy, no nothing. And then they said, well, we still think your paperwork is frivolous. And in the meantime, I learned some more information. I sent them really powerful stuff that I learned. I learned that the Congress has never authorized the IRS to enforce the tax code. Yes, the tax code is law, but there are no enforcement regulations.
Mm.
So I called that out, and and I got a letter from each one saying we need 60 days to review your matter, and the other one, we need 90 days to review your matter. Again, no penalty, no lien, no levy. They really don't know what to say.
Mm.
Most IRS agents are as unaware of this as the general public. Only at the highest levels of the IRS do they know about this area of the law. Also, there have been people that have used this remedy that I know of personally since the early 2000s. And the IRS puts out a memorandum that they update periodically of various positions some taxpayers take in hopes of avoiding the tax.
Mm.
They have never added this remedy to that list, which means they know at the top levels that this is viable.
Oh my goodness. Well,
Yes.
Kelly Alexander, you have given us a whole lot to think about.
Yes.
And it's really amazing that it was you, of all people, who discovered this, and and you're now getting the word out. Thank you so much for coming to my Facebook Live. And this is really a way to improv, isn't it?
Yes, absolutely.
So I will put links in comments to Kelly's website and her email address if you want to contact her directly. Thank you very much again. And I hope to see folks again next week at Stuck Time to Improv. Bye now.